Still morning, still Tuesday, July 22nd. We're about 5 minutes after market open. I thought it might be interesting to talk about a long call versus a calendar spread. Now, calendar spread, probably your first thought is that that's a neutral trade, but it can be used as a directional trade. Let me try and show you. Before we get into that, though, if I am going to use it as a directional trade, I have to have a forecast. I've got to believe that my stock is either going to go up if I'm bullish or down if I'm bearish, and I've got to have some reason for thinking that. So we'll talk just a second about the stock that I'm going to practice with and give a brief why I think it's more likely to go up than down. We'll then talk a little bit about the reward to risk ratio and hopefully put on 2 different trades like you have seen me do in the past. So I have up here in front of you now a chart on Disney. And you can see that more recently it has been working its way up. It hit a high and then we came back down around support. Let's zoom in on this a little bit. Our MACD, again, it would be perhaps a little stronger signal if we wait for it to break the midpoint. Our stochastic, we have come out from the lower band, but you can see that our signal line here has reverted back a little bit, so not the strongest signal. I'm counting on the trend going. I'm counting on it going back towards its high, and that would give us about 4 points of positive move if I'm right about those things. So as part of an option strategy, this would probably be one that would be worth maybe 1% of the portfolio. Okay, so I have up here an options chain. I've got up this coming Friday, the 25th, and then the following Friday, August 1st. Part of the reason that I do this is because I do like to trade shorter term a lot of the times, but also I'm afraid you'll lose interest if I go out a couple of months. Need to try and keep this amusing for you as well as hopefully informative. So first, with a call, there's so many different ways to approach this, okay? If we go deeper in the money, it's going to cost us more, but we have a greater likelihood of making some money. We wouldn't have as much leverage. In this case, we are going to have a little bit of leverage. The opposite, if I were to go slightly out of the money, it's going to cost me less. I have less money at risk, but it's got to move a little bit more to make money. If it does move more, I've got the leveraging factor. I can make a higher percentage return. So in this case, let's go just the first strike that's barely out of the money. Okay, and let's take a look at what that would look like. Let's look at our risk profile here. Just like we would expect from a long call. We could lose the amount of money we put in. We could make a ton if it behaves itself and goes up. All right, let me take away this trade. Let's go back to our adding simulated trades. All right, and this time let's stick with calls, even though I might very well choose puts, but let's stick with calls. So we will sell and we will buy. So we're short this coming Friday and long the Friday after that. Okay, here's what our profile would look like. Now the profile is not going to look the same. Here's where we're currently at. We want it to go up. So if I was to do it right like this, it wouldn't be a directional trade, it would be a neutral trade, right? Hopefully that's making some sense to you. Now let's get rid of it. And let's go back and try this again. If I can get my mouse to cooperate. There we go. Now let's add in a few more strikes because my forecast was for this stock to move about 4 points. So let's go to, let's put in 12 strikes, 10 strikes, excuse me. And we were looking for it to go to about 124, 125. Now we're not going to bring in a ton of credit if we do that. So let's back that off just a teeny bit. And we might look at several of these. I'm always in a rush when I do this, but let's back it off just a little bit. And let's sell the 123s. And let's buy the 123s of the following week. Doesn't look like it took it. Let's try again. There we go. All right, now let's go back and take a look at the risk profile again. Again, maybe if I can get my mouse to cooperate. Okay, now you can see if this doesn't move at all, we're going to be at about break even. We are counting on this to move up. Okay. All right, now I'm going to place these two trades. I won't hold you online, but I will try and get them filled and check in tomorrow, and we'll talk about them more. Until then, good luck with everything.